Okay, folks, welcome to Market Wrap. So Airbnb, they had a really good report, I have to tell you. So we're going to be involved with Airbnb. Ideally, tomorrow we close out the short strangle, and we perhaps look to open up a naked put. Try to get a discount on some common shares, and then if we get hit on those common shares, well, then we'll just sell covered calls against it. It is a higher dollar stock. This is a market which is punishing growth. So I still do worry about that, despite the fact they had good numbers. We need to keep in mind that sometimes, even with strong numbers, much as what we saw the other day with Advanced Auto Parts, they had great numbers, yet they were taken to the woodshed after earnings. So tomorrow morning, we're going to have Shopify report. We have a fill on 2 contracts here. I posted those fills in the members area. So if you're wondering why you got notifications after hours, it's only because I populated the fills. Okay, so this is Shopify. We sold to open the 1125 calls, sold to open 685 puts, generating a credit of $7.14 on 2 contracts. That's a little over $1,400. So I have an order in to close out Shopify at an 80% profit, maybe a little bit less than that. And Shopify will target the same amount. It all depends, of course, on the price movement of the shares. So I don't want to get too ahead of ourselves, but that is the game plan. If we don't get much volatility out of either of them, we'll look to close those trades early on tomorrow. Okay, folks, let's kick things off with bonds as we normally do. So at lunchtime, I put a note in the Slack forum mentioning that bonds were looking strong and that yields may be showing a little bit of topping action. That changed a bit into the close, whereas yields didn't close at the highs of the session. They certainly recovered off of where they were at lunchtime. And when you take a look at the closing price action of the TLT, we closed at the lows of the days. And we had a negative crossover, a bearish divergence of the 50-day moving average crossing below the 200-day moving average. No bueno. Very, very bad. And what we can imply from that is that while we saw a very strong move up in the NASDAQ today, those rising yields are going to cause problems if they persist. Now, if we get a pullback, sure, we could see a rally. Okay, the tip market, Treasury inflation protected securities, not looking good. Again, this is another indication to me that traders believe that the Federal Reserve is actually going to tackle inflation. There's really only one way, only one way where the Federal Reserve is going to be able to tackle inflation. That is if inflation gets to a point where people just stop spending. You'll just have inflation definitely at the food level, probably at the energy level, but I really find it hard to believe they're going to be able to do it. So when you take a look at the tips, which are Treasury inflation protected securities, why do people buy them? They buy them because they're afraid of inflation. When they're being sold off, well, that means they're not worried about inflation. Therefore, NASDAQ up today, tips down today. People are going into risk on assets rather than inflationary protection. They got it wrong. So we're going to stand by that for now anyway. Might we get a short-term rally? I said last night, I'm 50-50 that we may get a short-term rally or we could break down. I rarely am I that indecisive, but it's really just showing patience and saying, okay, the market's going to tell us which way it's going to go. We're not going to divine it. All right, the charts are on a crystal ball. The markets are going to tell us by either breaking out and above resistance or breaking down and below support on volume, which way this market is going to go. So that's the tips, the dollar. So we're back to bonds down, dollar down. I don't care all too much about the daily chart. Remember last week was a very bullish chart for the US dollar weekly time frame. We had a bullish key reversal bar. We had a follow-through week so far this week, but I don't think it's going to hold. Why? Take a look at these Stokes. This is a weekly chart now. It's not a daily chart, not an hourly chart. It's a weekly chart. It's a macro view, and things are not looking well. In fact, I would argue that things are unwell with the US dollar. And if we want to really dress this up, we have broken down below key support levels. Now, it's Tuesday. We have 3 more trading days left to go. A lot can happen here. Maybe we'll rally back. Maybe we'll go to new all-time highs for all I know. But at this point in time, this week, we have a bearish key reversal bar, warning flag on the track. The VIX daily chart hammered today, down nearly 10%. Stokes rising. MACD went positive. So momentum is still at the back of the VIX here. This is not broken. It's down. And I mentioned, was it last night? I believe it had to be. Just want to make sure this is updated. Yeah. Last night that this appeared to be topping action and that we would probably get a brief rally and a pullback on the VIX. We got that. The Dow Transports daily chart, we moved up higher today, but take note of where we got stopped. Right at the 20 period, 200 period moving averages, and we failed to close above, let's call it 15.3. We tested it. The high was 15.321, but it couldn't hold it. And look at the volume. We had heavy volume, and we closed off the highs of the session. So what this tells me is that you had some heavy hitters in there taking advantage of the pool of liquidity that the Ukraine was providing them, meaning that we weren't going to go to war. I didn't believe we were going to war to begin with unless this president is really that far gone, which he just may be. Anyway, I don't want to get political. Volume to the close here. This is a 15-minute chart. Volume to the close is very, very good. This was going at the 3 p.m. hour. Buyers stepped in the final minutes. They may bid this back up tomorrow. The S&P 500. We are smack dab in the middle of a developing triangle formation. And this is why I said last night, I don't know which way we're going to go here. As far as I know, tomorrow morning, we're going one of two ways, if not both. We're going up or we're going down. It doesn't matter what it does intraday. What matters is where it closes. We're not going to get excited about the market or get overly bearish about the market until we either break out above resistance or break down below support. Now, these Stokes are weak. Remember, we broke out a few days ago, and now we've rolled back over. So momentum strong to the upside, now weak and declining. Price did not reflect any type of fading on the day. It closed pretty much at the highs of the session, which is good. But volume was horrible. Volume matters. The Dow Jones Industrial Average closed up 1.22%. Same deal here with the Stokes. Losing momentum. We recaptured a support level. We were stopped, just like the transports, at the 200-day moving average. We closed above the 20-day. Volume, horrible. See the theme here? The Trip Qs closed up nearly 2.5%. I think what we need to do is modify our resistance levels to reflect most recent resistance to get an accurate read of where our lower bands of support are and where resistance is. And we'll keep this here. This is like our trip wire. You know, we break back down below 345, and this ETF is in trouble. I do not like these Stokes. Lower highs, and now they're trading down below the 50 mark. Rallies tend to fade. How was volume? Volume was horrible. The small caps, a very solid day. They were up over 2.5%. Stokes, higher lows, higher highs. Price action, very strong. This 209 mark, it's going to take a Canadian Freightliner truck to go breaking through. There's so much resistance up here. It's ridiculous. So volume had better be good, and it was not good today. The banks bounced back today, rising yields, rising banks. They didn't close at the highs of the session. They were up a little over 1 1/3%. Stokes may be beginning to flatten out here and perhaps hook up. Well, that's a wait and see. If they do flatten out and hook up, that'll be very bullish. That sets us up for a continuation move up higher. RSI holding 50 and hooking up. Good stuff. Volume light. All right, so the theme here, folks, is that we have momentum indicators which are wonky at best. They're just, some are signaling weakness, and these are the major averages. And some on certain sectors like the banks, they're not wonderful. We're waiting for them to do something ideally bullish because we have a position in the banks, and that bullishness is a flattening out and some rotation into the bank stocks. Technology, a very good day today in terms of price action. A big gap up. We closed at the highs of the session. That cannot be understated. Now to the negatives. Momentum indicators, losing momentum. These Stokes are going the wrong direction. Volume, below average. So the below average volume theme is a steady drumbeat of negativity tonight. You need your institutions, folks. Mom and pop buying 100 shares of the XLK just ain't going to do it. Energy. Daily chart. A down day. We kind of knew this was coming. We were seeing some topping action. We stopped going up. This breakout on Friday, no follow through, even though it came on volume. And the distribution days we're seeing the past couple of days, they're distribution days because they have volume. So you're seeing some profit taking up here. It's natural. I don't think that this Ukrainian thing in the end means much of anything. And in particular, I don't think it means much for stocks. I think it was a reason to take stocks up higher. That reason is now gone. The reason why they were selling off, which is a threat of rising interest rates by the Fed and rising inflation, they are here. They're going nowhere. And I mentioned the other day that the one thing that could hurt energy, I think I said in particular oil and gold. I either said it on Sunday Night Futures Live or on the Week Ahead Commentary, I forget. That if there was a resolution to this Ukrainian crisis, then you may see some profit taking because there was a flight to quality. Remember, we were seeing the dollar and gold trade up in tandem. Rarely do you see that unless you have geopolitical risk. And sure enough, today was risk off, gold folded, but frankly, so did the US dollar. Emerging markets, very strong. We're going to be looking at the emerging markets very soon. In fact, I want to take a look. We'll go to the daily chart, but I want to point out again, folks, down dollar, up emerging markets. All right, the inverse correlation is clear and defined. So I'd like to wait until the end of the week. Let's see how the dollar closes out the week. Does it really get annihilated? If it does, then we need to be looking at emerging markets. In fact, let's bring this up on TrendSpider. Set some alerts up here. All right, so this is the EDC, a weekly chart. Let's take the automated trend lines off. I just want to get a feel for the look without the trend lines. Okay, so we have higher lows on our Stokes. This is a weekly time frame, folks. So it is significant. Now, so far on the week, we have a bullish key reversal bar. Good stuff. The week's not over yet. We don't know if it's even going to close up by Friday. We know a lot can happen in one single day, much less we still have 3 trading days left to go. So we'll play it by ear. Now let's put the overlays on. Let's use the automated trend lines, weekly time frame. And you can see here we have resistance immediately above. So let's create an alert, and we're going to keep this active for a while. So I'm liking these Stokes, higher lows. And now what you're beginning to see, folks, and this is the first time in a while, higher highs. So that's good stuff. Let's go to the daily chart. The daily chart's looking really good. We broke out above this heat map, which implies that you have a lot of congestion in here, a lot of historical backing and filling on price. So EDC is looking very good. So we may be involved with it in a very short while. So our alert is set. We're good to go. Gold. All right, so we pulled back. I mean, last night when I went to bed, it was ripping, but that was because of Trudeau And I can't believe he did it. His basically martial law on certain segments of the society. So daily chart, we woke up this morning, Ukraine all of a sudden was not an issue, and you saw a risk-off event with gold. This is an opportunity because I've been saying for a while now, first stop 1800, next stop 1830, next stop 1850. Where do we bounce today and close? Just off that 1850 mark. We held it. I don't care about a one-day pullback. It means nothing. All over the Twitter sphere, I looked a little while ago. You look under GLD or gold or whatever, and even on silver, all they're talking about is an outside reversal bar, how bearish it is, we're going down, blah, 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 blah. Maybe we will. It's an opportunity. GDXJ. These are our positions now. The GDXJ daily chart closed down over a percentage point. But the key here is that we rallied off the lows of the session. So not all down days are equal. Some are better than others. What do we do here? There's a story being told. Let's pay attention to it. 20-period moving average rising. 50-period moving average rising. Where do we rally down to and come close to tapping? The rising 50-period moving average. What do? We closed above support. I didn't just draw this. This line's been here for I don't know how long now. So the key is this. I shouldn't be using a daily chart, but I will for illustrative purposes anyway, because I'm going along here. You start breaking out above this resistance level, these prior peaks, and you start putting in higher highs, you're going to see short covering in a very big way. You see the dollar roll over in a very big way. Those shorts are going to have their faces ripped off. Nugget, we bought call options, actually a call spread to be accurate. So for those not familiar, we opened up a long trade of deep in the money Nugget contracts, call contracts, and to help finance the trade, we sold deep out of the money call contracts, both expiring in June. So we have room to correct any mistakes that we might make because we bought ourselves time. Once you hit that 45-day mark, if you're long of options, that time decay, it starts to bite in. Right now, we're out into June, very little time decay. So we're looking for a short covering rally, much as what we're looking at on the GDXJ. We're taking our crayon out. And look what they did yesterday. They broke it out yesterday above resistance, but it couldn't hold it today. Silver, daily chart. So yesterday we flashed a doji star formation. So this pullback is not a shock. We're finding support at what? The 50-day moving average, which is now rising. Volume was slightly above average today. We're okay here. We'll remain long. SILJ, again, as I mentioned earlier, not all down days are made equal. What did we do today? We rallied off the lows of the session. We couldn't close positive, but we did, in fact, close above that 1250 mark, that ever-elusive 1250 mark. Good stuff. We'll remain long. Gold money. Nice rally yesterday. Bit of a pullback today. Cal-Maine Foods. A little egg company that could. Why are we long of Cal-Maine Foods for new members? We're looking at the monthly chart. Look at this macro breakout on Cal-Maine Foods. So this is not a short-term swing trade. This is a longer-term, very bullish setup. A multi-month consolidation, very tight Bollinger Bands. RSI broke out back in December. So you have an indicator leading price performance. This is one of my favorite charts. We're halfway through the month, and volume is already very close to the 3-month moving average. PayPal. Okay, so we opened up a position today on PayPal. Not my favorite price point, 110 I prefer, but it looks like they're going to try to rally this market a little bit further. Maybe we'll scalp a trade here. I still think we're heading down to 110, and for a more extreme sell-off, 100. So we stayed small with the buy. If we break down below 113, 112, we're going to have to stop out. We'll see if 110 holds. And for those afraid that we're getting stopped out, we We're long of PayPal back here. We stopped out, and thank God that we did. We took a chance. It didn't work out. Now we're speculating yet again, small position. If we're wrong, well, we're wrong small. DWAC, an update today, 1.5%. This looks like it's going to take off. Very bullish chart. Nice orderly pullback. It held the 20-period moving average. All systems go. ARC, of which we are short. Weekly chart. I want to tell you the story of why we're short, to share it with you. We have a lot of resistance, as noted by these topping tails on the ARC fund. When am I wrong? We close above 80 bucks a share. We could do one of two things. Because the way we're short of this, we sold naked calls, 85 strike. We could either A, buy the fund, and then this becomes a covered call trade, or B, we, rather than have a naked call, well, we open up a put side and create a strangle. I'm not ready to make that call yet. Way too early in the week. Let's go to the daily chart. Daily RSI looking okay. Stokes, okay. Now what we have here is a triangle formation. Right? So does it break out or does it fail? I feel under zero pressure to do anything right now other than to sit tight. Don't add more until you get a confirmation, meaning add more short until you get a confirmation breakdown. Or don't look to cover that short and create a covered call or a strangle until such time as you break out above $77 per share and you close there. Then we could start entertaining hedging that short position. I do not think that we're done going down on ARC in the longer term. Let's talk a little bit about LABU. LABU is in an area where it's struggling right now. I'm going to take the heat maps on. I'm probably going to put them back in a moment. You know, just acknowledge the fact that we have a lot of activity in this area, right? This red zone is clearly an area of congestion. So you're going to have sellers above. Let's take it off. So what we did today is that we closed above this support level here in green after bouncing off of this other lower band of support in green. So it was a strong close. The thing is that you have immediately above, these are the automated trend lines, immediately above you have resistance. So do I want to buy here? No. Might I try to sell another naked put on LABU? Probably. I can't buy it here. So I'm going to try to wait until as late in the week as possible to open up that trade to make sure that we're going to hold this support level. Maybe we'll sell the 19s, the 18s. I don't think I'm going to sell the 20s. Too close to all of this congestion and resistance. Let's bring the heat maps back on to identify where the lower range is. And it really begins to heat up at around 18 bucks a share. 17.50 begins. 18 is really begins to heat up. So we'll probably look to sell the 18 strike because there's probably going to be a little bit of support down there. And we'll sell premiums, sell puts, and we'll generate cash flow. With that, folks, everybody have a great night, and I will talk to you tomorrow. Be well.